Hey everyone, how you doing? This is Chris Johns here, Guaranteed Rate Mortgage, and I honestly, it's been bothering me a little bit how much confusion there is around this Biden mortgage cost increase thing, and I've been racking my brain trying to figure out a way to explain it to everybody so that it can make sense, and we're just going to move forward business as usual. So let's start by kind of defining what happened so you understand it. So you'll see on my screen here, number one is going to say, what is an LLPA? So this is a loan level price adjustment. And what that is it is a cost passed down from Fannie Mae and Freddie Mac on conventional home loans that is on a tier depending on your credit score and your down payment amount. So the chart that you see on the screen right now, this is the current new chart that went into effect on May 1st, 2023. So what I'm going to do just to help you understand it is we're going to run through a scenario here. So let's say someone comes to me on Friday at 2 p.m. and they say, I'm looking at a home with my real estate agent tomorrow at 10 in the morning, and I think we're going to want to put an offer in. Can I get pre-approved? So what I do is I hurry up and say, yep, you bet, send me your loan documents and income pay stubs and things. I'm going to pull your credit, and you have a 675 credit score. Okay, so you just kind of put my back against the wall and really your own back against the wall because you're trying to close on a home loan in 20 to 30 days and you've got a 675 credit score. So you're going to see on this chart that can be costly. And so if you have a 660 credit score and you're putting 10% down, what you're going to see is a 0.5% here in that box. So what that means is you're going to get charged by Fannie Mae and Freddie Mac a cost for your interest rate of 0.5%. So the way that shakes out is I have identified a $400,000 loan amount, 675 credit score, and 10% down. You can see that we have a cost of 0.5%, which is $2,000. So this is real life. This is what is happening today, and it's what was happening 2 or 3 weeks ago and 2 years ago. This chart stayed the same as far as its existence. We've always had this chart. What happened with this change was that some of the numbers in the chart changed. So the ones that are a shade of red, those ones got slightly worse in this change. And the ones that are a shade of green got slightly better. So you can see that most of the green is concentrated in the lower credit scores down by the 660s and 640s and 620s kind of thing. And then some of the higher credit scores in the mid to high sevens got a little worse. Okay, so this is not the end of the world. They didn't get that much worse. All of this was still happening. So don't worry about that. I just want you to understand it. Okay, so here's what we're going to do. We're going to do a different scenario. So let's say you came to me 30 days before you wanted to buy a house. You had a 675 credit score, and I showed you how to raise your credit score by 50 points up to 725. And I've done this so many times, it's not even funny. I would argue that there are thousands and thousands of people out there that just don't know what they're doing as far as managing their credit. You could, in many, many cases, with $2,000 or $3,000 and the right knowledge, increase your score by 50 points as well. And I can show you how to do that. Certainly not a guarantee, but many, many people would fall into that category. So let's see what happens now if we raise your score to 725. So you can see we're up on this line here. We follow it over 10% down. And instead of a cost of 0.5, that is a credit of 0.5. Fannie Mae and Freddie Mac are going to give you a credit as far as the price of your interest rate of 0.5% instead of a cost. So the way that shakes out now is that $400,000 times our 0.5 in the positive direction is a $2,000 credit. Okay, so what was the impact of you getting pre-approved ahead of time and letting me help you do some credit score improvement based off of this loan level price adjustment chart that just changed? Okay, so instead of having a $2,000 cost with your 675 score, now you have a $2,000 credit with your 725 score. So the turnaround financially for you, instead of a cost to a credit, is a $4,000 swing for you. So this is a huge deal, guys. By taking ownership of this process and not procrastinating and getting your income documents and your credit in front of me ahead of time, it could literally save you $4,000. Don't we all want to save $4,000 as home prices have increased and the cost of milk and eggs and every other thing has increased? You know, saving $4,000 is kind of a big deal. So I'd like you to take this serious. Please contact me when you're at least 30 days away from putting offers in on a home, and I can just help you save tons of money by educating you on how all this stuff works. We'll hold your hand, walk you through the process, and we've been doing this for a long time, and I'd love to help you. So thanks a lot for watching this video, and if you will kindly like and subscribe, it will really help me boost up this YouTube channel because I'm trying to get some really great content out to people. So thanks again. Take care, guys.